Hello everybody, welcome to Sir Chua's Accounting Lessons PH, and this is Lesson 40, Analysis of Financial Statements Part 2, and we will be talking about ratio analysis and interpretation. At the end of the video, you should be able to analyze financial statements through ratio calculation and interpret financial ratios. Before anything else, please like, share, and subscribe to Sir Chua's Accounting Lessons PH, and please hit the notification bell button to alert you of the latest video lessons. For all of your questions, comments, and suggestions, please put them down in the comment section below. And for webinar and speakership invites, please send me a message at kevintroy1994@gmail.com. Thank you for your utmost support for Sir Chua's Accounting Lessons PH, and may these videos continue to help students in their online learning and academic development. And may these videos continue to help teachers in enhancing their lesson plans and teaching methodologies. Muli po, maraming salamat, and I would like to take this opportunity to say thank you to the following students and sa mga schools pong ito na gumagamit ng Sir Chua's Accounting Lessons PH. Hindi ko man po maisa-isa na lahat ng mga estudyanteng ito, pero at least I can say the school, and I again thank you po for your support for Sir Chua's Accounting Lessons PH. Francisco P. Tolentino Integrated High School, Tagaytay City, University of Eastern Philippines, Catarman, Northern Samar, Oriental Mindoro National High School, Calapan, Oriental Mindoro, Marinduque Academy Incorporated, Mogpog, Marinduque, Aplaya National High School, Laguna, Franciscan College of the Immaculate Conception, Baybay City, Leyte, Central Mindanao University, Maramag, Bukidnon, College of St. Adela Incorporated, Bulacan, Narvacan National Central High School, Barotac Viejo National High School, Iloilo City, University of the East, Caloocan, SCI College, Caloocan, SCI College, Baguio, Palawan National School, San Jose National High School, San Jose del Monte, Bulacan, Lipa City Senior High School, and University of Santo Tomas, Manila. Muli po, maraming salamat po for trusting Sir Chua's Accounting Lessons PH as your online learning partner. In the last lesson, we learned about horizontal and vertical FS analysis. So you learned how to check the peso change and the percentage change, and then the component analysis or the common size analysis with the use of the vertical FS analysis. And now we are ready to learn the part 2, which is ratio analysis. Again, the objective of accounting is to provide information that will be helpful in decision making. So that's how we actually defined accounting, which is an information that can help the owners, the managers, and the users of the financial statements get better information, and that information will be used in decision making. Truly enough, financial statements are able to provide information on the entity's financial position, financial performance, which can be seen in your income statement and cash flows. It is important for the owners and managers of the entity to be able to evaluate the results of all of their business activities, because this analysis can help them to confirm what happened in the past, evaluate what's happening now, and we can also predict future outcomes. Okay, and remember that we have 3 ways of FS analysis. So in the last lesson, we already discussed number 1 and number 2, and now we're in number 3, the analysis of FS through ratio interpretation. Okay, ratio analysis is a quantitative analysis technique applied by an entity to be able to assess the company's liquidity, solvency, profitability, and operational efficiency through scrutiny of account balances reported in the balance sheet and income statement. So we are now going to scrutinize the financial statements on the account titles that we need to consider in order for us or for the company to assess their liquidity, solvency, profitability, and operational efficiency. Later on, you will understand what these words mean. But in ratio analysis, we will be doing calculations of ratios in order for us to analyze what's really happening in the company through the use of their balance sheet and their income statement. Okay, so basically we'll focus more sa ating pong statement of financial position and statement of comprehensive income, because hindi natin ganong gagalawin si cash flow and si statement of changes in equity when we're talking about ratio analysis. Okay, so before anything else, please download Handout 040, Handout 40 the link, you know the drill. You can download it in the description box sa baba ng videong ito. Okay, so maraming salamat po sa lahat ng nagda-download at lahat na nagpiprint pa talaga ng ating mga handouts. Nakakataba po ng puso that you're really trusting Sir Chua to learn accounting. May mga nagsasend po sa akin ng pictures na piniprint po talaga at sinusulatan po talaga nila yung handout para makatulong at maka-aid sa kanilang learning habang pinapanood tong video ito. So, you know the drill. The link is available in the description box. You download Handout 40 to aid in our discussion for ratio analysis and interpretation. Okay, so let's first talk about liquidity ratios. Liquidity ratios determine whether an entity can be able to pay for current liabilities as they become due with the use of current assets. So, ang pag-uusapan po natin sa liquidity is, kaya bang magbayad ng company ng kanilang mga current liabilities gamit ang kanilang current assets? So, in liquidity, ang titignan natin is items related to the company's current assets versus their current liabilities. Now that we've told that, these are the liquidity ratios that we will be talking about. Current ratio, which is the ratio between current assets and current liabilities, and then acid test ratio, which is quick assets over current liabilities, and your cash ratio, which is the ratio between your cash and current liabilities. So as you can see, it is a comparison of your current items versus your current liabilities. Current asset items versus current liability items. Can the company pay for their current liabilities na current assets ang ginagamit natin? Okay? Let's first talk about the current ratio. The current ratio answers the question, can the company pay for their current liabilities with current assets? Kaya bang magbayad ng company ng current liabilities kung ang patutungkulan nating pangbayad ay current assets? Okay? The formula again is current ratio is equal to current assets divided by current liabilities. Okay, so ang gagawin po natin is titingin po kayo doon sa ating handout. Meron po dyang Statement of Financial Position ni Grumpy Cat Company at meron din po dyang income statement. Doon po natin uhugutin. Okay, so our calculation would be like this. For 2020, kunin nyo po yung current assets for 2020, which is 3,704,701. Divide po natin, sa ating pong current liabilities na 2,283,000, which will give us a current ratio for 2020 of 1.62. And then, our current ratio naman po for 2019 is kunin po natin si current assets ng 2019, which is 3,589,755 divided by current liabilities in 2019 of 2,423,000, which will give us a current ratio for 2019 of 1.48. Now, if you are analyzing financial statements, it's not enough that you see the numbers. What do these ratios mean? What do these numbers mean? Kaya po, nagkakaroon tayo ng ratio interpretation. And what is our interpretation dito sa lumabas na nakuha natin na 1.62 na current ratio in 2020 and 1.48 na current ratio in 2019? For both years, the entity's current assets are larger than current liabilities. The entity can pay for their current liabilities using their current assets since the ratio is greater than 1. So, ano naman kung greater than 1? Always remember that when the current ratio is greater than 1, the entity can pay current liabilities using current assets because the numerator, which is your current assets, is greater than the denominator, which is your current liabilities. And yun yung gusto nating mangyari. Mas malaki ang ating current assets kesa sa current liabilities. Now, if your current ratio is equal to 1, then your current asset is equal to your current liabilities. But, if your current ratio is less than 1, then the entity cannot pay their current liabilities using their current assets because what happened is that your numerator is lesser than the denominator. Okay? So, anong gusto nating mangyari? Always, ang ating current ratio ay greater than 1. Ibig sabihin, the current assets is able to cover the current liabilities. I hope you understand. Take a screenshot of this and we proceed to the next. Okay, so magtanong naman tayo ngayon ng multiple choice question. Given that the current ratio for 2020 is 1.62 and the current ratio for 2019 is 1.48, which of the following statements is correct regarding the current ratio of Grumpy Cat Company? A. Both 2020 and 2019 current ratios are favorable. B. Both 2020 and 2019 current ratios are unfavorable. C. 2020 current ratio is favorable and 2019 current ratio is unfavorable. Or D. 2020 current ratio is unfavorable and 2019 current ratio is favorable. Okay, pause the video if you need more time for analysis. Assuming that you have the answer already, the correct answer is RC, letter A. Okay, so both 2020 and 2019 current ratios are favorable because current assets is greater than current liabilities for both the years and the current ratio is greater than 1. Thus, both 2020 and 2019 current ratios are favorable. Awesome. Okay, let's continue with acid test ratio. Acid test ratio answers the question, can the company pay for their current liabilities with quick assets? Pag sinabi po natin quick assets, if you would see po kasi yung ating current ratio, meron po tayong items doon na hindi naman talaga readily convertible into cash. For example, ang inventory ay kailangan mo pa pong dumaan sa selling transaction bago mo siya maging accounts receivable, and then basically yung accounts receivable na yun magiging cash pa. Diba? So parang medyo matagal pa bago yung inventory maging cash. Tapos yung atin namang other current assets, like for example, prepaid rent, prepaid insurance, office supplies. Usually, hindi mo naman talaga maaasahang ma-convert as cash yun, di ba? So, ang ginagawa natin is ina-narrow down pa natin yung analysis natin. Quick assets lang yung gagamitin natin. In your handout, yan po ay represented ng ating pong cash, accounts receivable, and marketable equity securities. Yan po yung mga madaling maging cash na pwede nating ipangbayad ng current liabilities. Okay? So, our formula is asset test ratio is the sum of your cash, accounts receivable, and marketable equity securities, which we can refer to as your quick assets divided by your current liabilities. Okay, and then the calculation would be for 2020, you add your cash of 1,896,337 and then your accounts receivable, so on and so forth, divided by 2,283,000 your current liabilities for 2020, which gives you an asset test ratio for 2020 of 1.32. Habang sinasabi ko yung numbers, sundan nyo po sa handout yung amounts na sinasabi ko. Okay? And then, for 2019 is 1,456,997 plus 885,697 plus 450,000 divided by your current liabilities for 2019 of 2,423,000. Your asset test ratio for 2019 is 1.15. Okay. So, sir, pareho lang po ba ng analysis ang asset test ratio at ang current ratio? Actually, yes. Kasi ang gusto lang din po natin for both of those ratios, dapat greater than 1. Ibig sabihin, your numerator is greater than the denominator. And when the numerator is greater than the denominator, ibig sabihin, your quick assets can cover your current liabilities. Okay. So, what will be your interpretation? For both years, the entity's quick assets are larger than current liabilities. Kita naman natin, the entity can pay for their current liabilities using their quick assets since the ratio is greater than 1. So, that's favorable for the company. Remember that when the asset test ratio is greater than 1, the entity can pay for their current liabilities using quick assets. But if the asset test ratio is equal to 1, then your quick assets is equal to your current liabilities. But if the asset test ratio is less than 1, then the entity cannot pay for their current liabilities with the use of their quick assets. Meron po kasing mga company na favorable sa current ratio, pagdating sa quick ratio, pumapalya. Ayun. Ano po kaya ibig sabihin nun pag pumalya na sa quick ratio? Mas marami silang current assets na hindi agad convertible to cash. So, ang gusto nating mangyari, pag may current liabilities tayo, meron tayong ample cash na pambayad agad. Okay? Para mabayaran natin agad yung mga currently maturing obligations natin. Okay? In-narrow down pa natin. Okay? Ay, hindi pa pala. O, meron pa pala daw tanong. Nalito, sorry. Okay. Which of the following years would Grumpy Cat's quick assets able to cover current liabilities? A, 2020, B, 2019, C, both 2020 and 2019, or D, 2020 nor 2019? 5, 4, 3, 2, 1. The correct answer is both 2020 and 2019. Catriona, letter C. Okay, bakit? Kasi nga po, in both 2020 and 2019, greater than 1 po yung ating asset test ratio. Ngayon naman po, i-narrow down natin na cash lang yung titignan natin. Kapag ka ba cash lang ang tinignan natin, talagang kaya pa natin bayaran yung current liabilities. It answers the question, can the company's cash pay for their current liabilities? Baka pasado tayo sa current ratio at saka sa asset test ratio. Pagdating natin sa cash ratio, palyado. Tingnan natin, okay? The formula is total cash divided by current liabilities. Calculation for 2020, cash for 2020 of 1,896,337 divided by current liabilities of 2,283,000 gives you 0.83. And then for 2019, you do the same calculation, just get the cash in the CL for 2019 and you get a cash ratio of 0.6. Sadly, lesser than 1 na siya. So, nung ninarrow down pa natin na cash lang yung titignan natin para magbayad ng current liabilities, pumalya na tayo. That's your interpretation. For both years, the entity's current liabilities are larger than cash. The entity cannot pay for their current liabilities only using their cash since the ratio is less than 1. So, kailangan na natin ng reinforcement. Anong reinforcement yon? Mag-collecta na tayo ng receivables, magbenta na tayo ng mga marketable equity securities, magbenta na tayo ng inventories para magkapera tayo na pambayad ng current liabilities. Okay? So, remember that when the cash ratio is greater than 1, the entity can pay for their current liabilities using total cash. But if the cash ratio is equal to 1, your cash is equals to your current liabilities. And if your cash ratio is less than 1, then the entity sadly cannot pay for their current liabilities using total cash, which is what happened in our analysis today. Look at the cash ratio, 0.83. Cash ratio, 0.6. Mas mababa sa 1. Hindi natin kayang magbayad ng current liabilities kung cash lang mismo ang gagamitin natin. We need reinforcements. So, kung mapapansin nyo yung ating discussion, bukod sa kino-compute natin, in-interpret natin because these ratios has no meaning kung hindi natin siya i-interpret. Okay? Yun naman po talaga ang pinaka-essence ng FS analysis. We need to interpret what's happening. We need to interpret what we are computing in order for us to make proper decisions for the future operations of the company. Let's proceed with solvency ratios. Solvency ratios determine whether an entity has more ownership rather than debts. So, ang tinitignan naman natin sa solvency ratios is gaano kalaki ba talaga ang utang ng company. Okay? It's also called leverage ratios. These ratios involve comparisons of debt, asset, equity, and interest. But actually, solvency ratios is how solvent the company is. Baka masyadong malaki yung utang natin, hindi na tayo solvent. Okay? So, it includes debt ratio, which compares your total liabilities to your total assets. And then debt to equity ratio, which compares your total liabilities to total equity, and times interest ratio, or times interest earned ratio, which compares the earnings before interest payments and tax payments over your interest expense. Okay, let's discuss them one by one. We start with your debt ratio. The debt ratio answers the question, how much of the assets are financed by debt? Remember the accounting equation, assets is equals to liabilities plus capital. Interpreting it into analysis perspective, assets can be financed by debt, which is your liabilities, and your capital or equity, di ba? So, debt financing, equity financing. Yun yung titignan natin dito, no? Again, the formula is debt ratio is equals to total liabilities divided by total assets. Let's calculate for 2020. You just get the total liabilities. Pag-a-addin nyo lang po si current liabilities at si non-current liabilities, which will give you a total liability of 6,646,694. You simply divide it to the total amount of assets for 2020, which is 12,356,216. And the debt ratio for 2020 is 53.79%. You do the same for 2019. You just get the total current and non-current liabilities for 2019, which amounts to 8,174,997. Divide po natin sa total assets ng 2019 at 12,571,442, which gives you a debt ratio of 65.03%. How do we interpret that? For 2020, 53% or 54% na yan actually ng ating assets ay galing sa utang. Okay? And then for 2019, 65% po ng ating assets were financed by debt. In both years, debt is greater than equity since debt ratios are both higher than 50%. Kasi kung equal distribution ng ating liabilities and capital, so kung ang assets natin ay 100%, 50-50 ang distribution. Eh kung makikita nyo mabuti, both for 2020 and 2019, higher than 50% yung ating debt ratio. So basically, parang ang dating, yung equity ratio natin, mas mababa naman sa 50%. Kasi mas malaki si debt eh. Higher than 50%. So, how do you... so always remember, in debt ratio, when debt ratio is less than 50%, assets are financed more by equity. For example, kung ang debt ratio mo 45, edi 55% yung equity mo, mas malaki equity mo, di ba? Okay? When debt ratio is greater than 50, assets are financed more by debt. Mas malaki ang utang mo, di ba? And then, when both debt and equity is 50%, equal financing, no? Assets are financed equally by debt and equity. Now, coming from this information, let's answer these questions. First question, how will Grumpy Cat Company express the accounting equation using assets, debt, and equity percentages for 2020? Okay? Binigay sa inyo yung debt ratio na 53.79%. Alin po kaya sa A, B, C, and D ang proper representation of the accounting equation in 2020 using the asset, debt, and equity percentages? Go! Okay, assuming that you have the answer, the correct answer is letter C, Catriona. Okay? 100% is equals to 54% plus 46%. 54% ang ating debt and 46% ang ating pong equity. Let's do the same for 2019. How will you express the accounting equation for 2019? The correct answer is letter ganun pa rin. Catriona, letter C, 65 plus 35%. Mas malaki po kasi talaga si debt ratio natin ng 2019, which is 65%, which gives us only 35% of equity nung 2019. So as you can see, we're just applying the accounting equation here in your percentages. Now, let's have another question. What will be your conclusion? Okay? Kasi, as you can see, in 2019, our accounting equation is 65-35, okay? While in 2020, it's 54-46. So letter A is the company is always using debt financing. Letter B, the company is always using equity financing. C, the company is always using debt financing, but the company is slowly shifting from debt financing to equity financing. And letter D, the company is always using equity financing, but the company is slowly shifting from equity financing to debt financing. Go. Okay, assuming that you have your answer, the correct answer is letter Catriona pa rin. Letter C, the company is always using debt financing, but the company is slowly shifting from debt to equity. Bakit? Tingnan nyo yung debt ratio natin ng 2019, 65%. Tapos bumaba naman yung ating debt ratio ng 53. Tapos si equity naman natin, galing sa 35, tumaas ng 46. So, ibig sabihin, from 2019 to 2020, tumataas na po yung paggamit natin ng equity financing, bumababa na po yung ating paggamit ng debt financing. Okay? So, the company is slowly shifting coming from debt financing papunta ng equity financing. Okay? I hope you understand that. If you have any questions, please put them down in the comment section below. Okay, let's continue with debt to equity ratio. It answers the question, which has more weight, debt or equity? Anong mas malaki, debt or equity? Okay? Actually, sa debt to, yung debt ratio natin kanina, malalaman nyo na din eh. But we can simply do this calculation as well in order for us to understand. So, you will just be comparing your total liabilities to total equity. Okay? So, for your calculation, you just get the liabilities and equity both for 2020 and 2019. Okay? So, for 2020, it's 1.16 and for 2019, it's 1.86. Okay, so what's your interpretation? For both years, debt has more weight than equity since both ratios are greater than 1. Ganito kasi mangyayari dyan eh. If your total liabilities is greater than total equity, your numerator is greater than the denominator. So basically, ang mangyayari talaga, it will be greater than 1. So that's what you will remember. When debt to equity ratio is less than 1, equity has more weight than debt. Kasi mas malaki si denominator by that time eh, okay? And then when debt to equity ratio is greater than 1, debt has more weight than equity because your numerator is greater than your denominator. When debt to equity ratio is equal to 1, debt is equal to equity. So because the numerator is equal to the denominator, then your debt to equity ratio would certainly be equal to 1. Rising debt ratio means the company resorts to more debt and more interest expense. So, kapag ka daw po yung debt ratio natin tumataas, mas gumagamit na tayo ng debt financing. And i-expect mo na rin, dahil umuutang ka, pati yung interest expense mo tataas. Okay? But when there is a falling debt ratio, like sa atin pong example today, like tingnan nyo yung debt to equity ratio ng 2019, it's 1.86, but in 2020, it went down to 1.16. So, nagkakaroon po ng shifting going to equity financing, which is yung sagot po natin kanina. Balikan natin, di ba? Ano yung conclusion kanina? The company is slowly shifting from debt going to equity. So, it's being confirmed here sa ating pong debt to equity ratio kasi yung debt to equity ratio natin bumababa. And again, sabi natin, pag bumababa po ang ating debt ratio, nag-shift na po ang company going to equity financing. Okay? And asahan mo, yung interest expense mo, pababa na rin yan kasi hindi ka na ganong umuutang. Okay? Let's interpret this with, let's enhance your learning with these questions. Which of the following is correct, relative to Grumpy Cat's debt to equity ratio for 2020? A, B, C, or D? Go. The correct answer is RC. The ratio is 1.16. Ayan naman nakalagay na, di ba? Pero paano mo siya i-interpret? The company used more debt financing kasi mas mataas si utang eh, di ba? How about for the next question? How will you interpret ang ating pong 2019 debt to equity ratio? Go. The correct answer is letter RC pa din. Letter A, 1.86 kasi more debt financing din during that year. Okay, I hope you understand that. Let's proceed with times interest earned ratio. It answers the question, how many times can an entity pay for interest expenses with their operating income? So, ang titignan natin is yung operating income ng company. So, puproceed tayo ngayon purely sa income statement for this analysis. Can it cover interest expenses? Okay, kaya po tinawag na times interest earned ratio. Ilang beses po nating na-earn ang income na sana magamit nating pambayad ng interest. Parang ganoon. Okay? So, your formula is times interest earned ratio is equals to earnings before interest and taxes over interest expense. Okay? So, this is your calculation. Sir, paano po kunin yung earnings before interest and taxes? Punta ka ngayon sa income statement mo. Di ba may net income after tax dyan, yung 1,300,000 something, diba? Tapos, may tax payment. Balik ka doon sa walang tax payment. So, net income before tax. So, earnings after interest before taxes na siya. Okay? Tapos, i-re-add mo uli si interest payment. Okay? Yun po yung ating operating income, which is 1,888,384. You simply divide it to interest expense of 12,560. The times interest earned ratio for 2020 is 150 times. Ano ibig sabihin? The company's operating income can cover interest payments 150 times. That's awesome. Okay? Malaki masyado yung pambayad mo ng interest. Di ba? That's awesome. Always remember that the higher the times interest earned ratio, the better. It shows how the company is able to meet its interest obligation with the income that it earns. And congratulations for Grumpy Cat Company. It's 150 times. Okay? Pero hindi naman literally 150 times tayo magbabayad ng interest, ha. Ang gusto lang natin ipakita is talagang the company is able to cover their interest expense with the operating income that it has. Okay? So, those are our ratios, and we proceed to efficiency ratios. Efficiency ratios measures how well does an entity utilizes their assets and resources to generate income. So we have 3 efficiency ratios. We have the asset turnover ratio, the inventory turnover ratio, and the accounts receivable turnover ratio. Turnover, pag-ikot. Okay? You'll understand it better when we discuss it one by one, and let's start with asset turnover ratio. In asset turnover ratio, it answers the question, how many times can an entity generate sales with the total asset resources? Ang atin po kasing perspective dito is yung mga resources natin, sana nakaka-generate ng sales. Ang tanong, how many times can an entity generate sales sa paggamit natin ng resources? Okay? So, going back again to the formula, that's net sales over average total assets. This will be your calculation. Kunin nyo po yung net sales from your income statement of 4 million, and then dahil po average total assets, get the total asset for 2020, add it to the total asset for 2019 and divide it by 2 to get the average. Okay? So, your asset turnover ratio is 0.32. Paano po natin i-interpret sa 0.32? The company's assets can only generate sales 0.32 times. Hindi man lang tayo sumampa ng 1. Diba? Wala. Pangit. Okay? The higher the asset turnover ratio, the better. It shows how the company is able to generate sales from their resources. And sadly, we can only generate sales 0.32 times na hindi pa nga tayo umabot ng 1. Okay? So, our asset turnover ratio is quite unfavorable. Well, kita naman natin kasi our average assets is 12 million. And you can only generate sales from it on only 4 million. Okay? So, parang medyo unfavorable pa tayo dito. So, it gives the company a go signal to maximize their efforts in terms of selling. Okay? That's it. So, we proceed also with inventory turnover ratio. Dito naman sa inventory turnover ratio, how many times can an entity sell their inventories and have it replaced within a period? Ang gusto natin kasi mangyari, mabilis yung pag-ikot ng inventory natin. Laging nakakabenta, laging nare-replenish yung stocks natin sa storage. Okay? Ganun yung gusto natin mangyari. Laging maraming benta para laging nakakapag-replenish ng stocks natin sa storage. Okay? So, the formula for that is the cost of goods sold in your income statement divided by average uli ha, average inventory. So, our calculation will be, you just get the cost of goods sold amounting to 1,630,880, and then the average inventory for 2020 and 2019 divided by 2. Okay? So, 2.27. Ano ibig sabihin ng 2.27? The company's inventory turnover is low. Imagine, for the whole accounting period, 2 times lang nare-replenish ang ating inventory. Parang ang bagal nating makabenta. In the whole accounting period, halos 2 times lang. Parang ganon, okay? So, remember that a low turnover might mean weak sales and excess inventory. Katulad ng ating ratio, 2.27 lang. So, weak talaga yung sales natin. Mahina tayo makabenta. Tapos, sobrang inventory natin. Kasi ang bagal eh. Imagine for the whole year, 2 times lang, 'di ba? But a higher turnover might mean strong sales and insufficient inventory. So, in any case naman po that the entity has a high inventory turnover, it's an indication that the company is really doing good in terms of sales. Pero, watch out sila kasi yung inventory baka insufficient. Sobrang bilis maubos, okay? Kasi alam naman natin, pag mabilis maubos ang inventory, lost customers yun. 'Di ba? May bibili sa'yo, ma'am, di na po available, ubos na po. Ayaw naman din natin magkaroon ng ganong scenario, 'di ba? Okay? So the inventory turnover ratio helps the company understand the flow of inventory in terms of sale and in terms of kung excess ba yung inventory natin or kung kulang na. Okay? Now, day sales and inventory, pasok natin to. Sabi natin ay 2.27 yung ating inventory turnover. Ang tanong ngayon, how many days nating hawak yung inventory bago makabenta? Okay, so your formula will just be 365 days in a one whole accounting period of 1 year divided by the inventory turnover of 2.27. Sadly, 160 days ang isang company para yung 160 days, hawak nila yung inventory ng 160 days bago makabenta. Sobrang bagal nun. 160 days is ilang buwan yun? 160 divided by 30. Oh, that's 5 months, diba? Well, this is actually just an example, but in reality, this is a red flag. 5 months ka lang makabenta, 'di ba? Parang hindi naman na masyadong okay yung business mo, 'di ba? 5 months ang hinihintay mo bago makabenta. Pero yung interest payments mo sobrang dami kanina, 'di ba? You are able to pay for your interest abruptly and you have amount to cover it using your operating income. But look at the day sales and inventory. Wala. Ang layo masyado. 160 days. That's so unfavorable for the company, okay? I hope that you are appreciating how we apply these numbers into interpretation, 'di ba? It's really a wonderful way for a company to decide properly for their operations, 'di ba? Okay, let's proceed with your accounts receivable turnover. Okay, so it answers the question, how many times can an entity turn their receivables to cash? Okay? Yun po kasi ang gusto nating mangyari, yung receivable natin maging cash. Ang tanong, how many times during the accounting period? Okay? So, you just divide your net credit sales over your average accounts receivable. For purposes of our discussion, let's assume na yung 4 million po nating net credit yung 4 million nating net sales ay lahat naka-accounts receivable. Okay? So, your net credit sales of 4 million divided by your average accounts receivable. You know the drill. You just get the 2020 and 2019 accounts receivable, then simply divide by 2. Okay? So, your accounts receivable turnover is 5 times. What's your interpretation? In an accounting period, the company can turn receivables into cash only 5 times during the whole year. Mabagal din yun, okay? Parang ang dating 5 beses ka lang nakakapaningil, okay? Remember that a low turnover signals weak collection efforts and a high turnover signals strong collection efforts. So, ang gusto nating mangyari, mas mataas pa yung ating accounts receivable turnover, okay? Now, related to our days in inventory, parang ganito rin yung approach ng days in receivables. Ilang araw yung hinihintay natin para maging cash ang ating receivable, okay? So, kung 5.2 ang ating accounts receivable turnover, ganun din po ang mangyayari, 365 divided by 5.2, 70 days. 70 days is 2 months, 2.5 months actually, 'di ba? So, layo nun, di ba? Ang gusto natin, sana, halos every month. Hindi nga lang dapat every month, di ba? Pero, that's how it is for the company. 70 days ang atin pong days in receivables bago siya maging cash. Anong gusto natin sa company? Mapababa yung days in receivables natin. Okay? And we proceed with profitability ratios. It measures how well does an entity generate income that relates to their revenue, operating costs, assets, and capital. So we have gross profit ratio, return on assets, and return on equity. Let's discuss them one by one. Okay, for the gross profit ratio, how much gross profit does the company make after considering cost of goods that were sold? Ganito lang kasimple. Ilang percent ang tinubo natin sa pagbebenta? Remember, net sales minus cost of goods sold is tubo, di ba? Gross profit is tubo, okay? So your formula is you simply divide your gross profit to your net sales. And seems familiar kasi ganyan lang din po yung ginagawa natin sa vertical analysis, di ba? Ang net sales yung base natin. Ilang percent ng net sales natin yung naging tubo, okay? So for 2020, it's 59.23%, okay? 59.23% of sales yung ating tubo. Okay? Remember that gross profit ratio represents the amount of gross profit for every 1 peso sale. Ngayon, nabanggit sa inyo yung 1 peso sale. Try nga natin sagutan to. For every 1 peso net sales, how many centavos are gross profit? Okay? So, kung 59.23%, you just multiply 59.23% by 1, lalabas po si 59 centavos. Ibig sabihin, kada pisong benta, 59 centavos ang tubo ni company. Okay? Ganun nyo siya i-interpret. Return on assets. Magkano bumalik sa paggamit natin ng assets? Siyempre, kumikita ka na, di ba? Magkano bumalik sa paggamit natin ng assets, okay? So, you just simply divide your net income to your total assets during the accounting period. So, the net income of 1,313,077 divided by total assets for 2020 of 12,356,216, 10.63% ang bumalik sa ating assets. Okay? Siyempre, ginagamit natin yung ating assets para kumita and 10% return yung na-enjoy ni company in the usage of their assets. Okay? The higher the returns, the better. Okay, same approach with return on equity. How much income was returned to the usage of equity or magkano ang bumalik sa ating shareholder investment. Okay? So you simply divide your net income to your total shareholders equity and that's the same process. You just divide your net income of 1,313,077 to 5,709,522, which gives you a return on equity of 23%. Ano ibig sabihin? The entity enjoyed 23% returns sa ating pong shareholder investments or sa ating pong equity, and it's the same. The higher, the better. Awesome. Okay, so I hope you understand our lesson and Sir Chua gave you a preview. So, punta lang po uli kayo sa description box. I gave you a practice FS analysis calculation. Okay? Using the mini activity. Excel file po yun. So, actually, that was originally a laboratory activity that I prepared for my classes way back 2017. But I'm sharing it to you for your use. So, sana ma-enjoy nyo po. You can practice analysis calculations using that Excel file. And I'm giving it to you for free kasi love kayo ni Sir Chua. Okay? So, our next lesson will be about bank transactions. So, malapit na po tayo sa bank reconciliation statement. Tapos, taxation na lang. Tapos na yung FABM2. Ganun lang kabilis. Okay? So, again, please like, share, and subscribe to Sir Chua's Accounting Lessons PH. Hit nyo yung notification bell button para ma-notify kayo pag may bago akong upload. And then, comment lang kayo sa baba for your questions, comments, and suggestions tsaka mga love letter nyo. Okay, and message me at kevintroy.chua1994@gmail.com. This has been Sir Chua's Accounting Lessons PH. To God be all the glory, honor, and praise. Thank you, Lord, for everything, and lagi tayong magpapasalamat sa Panginoon. Purihin ang ngalan mo, Panginoon. Maraming salamat po. Thank you and have a great day. Sarangeo.